Right, good Friday morning. We got here eventually, half an hour away from the opening bell in Hong Kong, in Shanghai, and in Shenzhen. You're watching the China Show. I'm David Ingles with Yvonne.
Our top stories this morning: Asian stocks edge higher ahead of Friday's U.S. jobs report that's set to shape the Fed's rate outlook. The ECB delivering on that 25 basis point cut, but no signals on the next steps.
Now, investors will be eyeing China's trade numbers due at some point today for clues on the strength of this domestic economy and also external demand.
Plus, an exclusive with the president of Alibaba's B2B e-commerce platform on their expansion plans and using AI for global trade. All right, it is Friday. Of course, we made it to the end of the week, and certainly we're still set for some gains here when it comes to Asian stocks. But we're hitting a bit of a, steady wait as we see sort of mode here as we await, of course, that U.S. jobs report to wrap up the week to just really see and confirm whether this week of sort of weaker data from the U.S. and the macro side of things, is that really what's going to warrant more Fed pricing of rate cuts, right? Because right now we're talking about as early as September. Is it enough if we see a weaker print from the labor market to shift those odds closer to a rate cut in July now? That certainly is what the market is dealing with here. Of course, still sovereign bonds. You take a look at what's been going on. We're still set for the biggest and longest winning streak among sovereign bonds globally of this year. I think we've seen gains of about 5 days or so when it comes to not just the U.S., Australia, even RBA sort of rate cut bets have been ramped up a bit here as well. So certainly we're watching very closely. 4.29 for your U.S. 10-year yield. We're back to those April lows, or 2-month lows, excuse me, for those Treasury yields here right now. And we're watching the euro very closely, right? So it was a hawkish cut. So they talked about, they delivered on that cut, but really they all but ruled out a July cut. But September still looks pretty iffy here as well. So we saw a bit of a bump up in euro dollar, and then it basically faded throughout that press conference here as well. What's notable this week has been the strength in the yen, though, right? That's something that has stood out. 155.74 levels here. That's certainly one to watch here, because does this mean that we can still see more upside when it comes to yen, or is this still a market that still thinks that yen can weaken further? But yes, Treasury yields heading lower. That certainly has helped yen this week so far. Kospi is worth noting after they reopened from the holiday, really putting a bit of catch up here from that AI trade that we saw yesterday as well. Take a look when it comes to what's also we're watching out, the political shocks of the week, right? Whether it's Mexico, whether it is India. Well, we're seeing India futures, though, have been pretty flat here after what this recovery we've seen since those exit polls and really the shocker of Modi losing that majority. So we'll see how that plays out. Maybe a bit more stabilization in that market here. Mexican peso, some strength, but certainly we saw quite a bashing, about 2% weakening just yesterday here. Just given how people just really didn't foresee these political shocks in these key elections. And keep in mind, the Mexican peso has been one of the key sort of big FX trades of late. So certainly you're watching, of course, this China Open. We have that trade numbers coming through here later on today, expecting at least exports to jump in double digits or so. It's according to Bloomberg Economics. Could be just a low base effect, but really a sense of what we're going to get in terms of the external demand picture. Also, you take a look at southbound flows into Hong Kong. We continue to see a pretty steady, right? 16 straight days where mainland investors have bought into Hong Kong stocks here. Futures are pointing slightly to the upside here, 726 for the currency, Dave.
Yeah, those inflows keep coming in. In fact, I just isolate at this point in time. So a couple of stocks were tracking ahead of the open today. So watch for Tencent. That's been out 4 straight days. And really a market that's remained past tense. We'll see what happens with Friday, range bound. Earnings reaction from the likes of Meituan, which was a beat. Net income was up 60%. And then, of course, there's the NEO story, which is the opposite story. Chow Tai Fook and some of the makers of these e-cigarettes, for example, in focus today. So news out right before the close yesterday, which Chow Tai Fook then came out and sort of clarified that's a rumor on production halt. That's number one. And number two was the news that Hong Kong might be looking to restrict further, of course, smoking in the city. 30-year yield, bottom of your screens. While we're looking at that, there's a bond sale today, special bonds. We should be getting the details of such in about 90 minutes or so. And also when you look across local media, we'll talk more about this later, 50-year CGBs, we now have a date according to a report sometime next week. More on that in a moment. And of course, trade is pointing out trade. FX reserves, and also out of Taiwan, since we're all talking about this Nvidia story, we're also looking at exports. There also should be due out, I believe. If not, should be due out later today. But yes, all roads lead back to central banks. Why not?
Yeah, and I think just this enthusiasm that we're seeing in the bond markets, really, it's going to be tested by this U.S. jobs report, right? I mean, we're expecting about 180,000 jobs, I believe, which is one of the, I think, slowest prints we've seen this year. So is that enough to continue on this bond rally is one thing. And really, can we start shifting those calls of a July rate cut back on the table? You still have the likes of JP Morgan, Citi holding on to that call right now. And there's a really dependent on what we see here on Friday, too.
Yeah, I think the data today will determine whether they need to stick with that call on Monday, whether they need to change it at this point in time, right? So I think to your point, you have Citi. I think Standard Chartered says the market pricing on around July is a little bit too low for what is possible there. September is what we're pricing in, and then November, so 2 cuts there. And of course, the ECB came in and said, okay, fine, 25 is done. We're not sure, though, how the next...
Non-committal.
Well, certainly not the next month.
Well, they also raised their inflation forecast, which is quite ironic given that you just delivered a cut. So I think it just goes to show they're going to be basically meeting dependent, data dependent. I think we still have 2 more Eurozone inflation prints until the next meeting. So still a lot there. But we did hear from Christine Lagarde. Here's more from her.
Are we today moving into a dialing back phase? I wouldn't volunteer that. Because, as I said, we are making a decision on the basis of the confidence that we have that we are on a path.
Joining us here on set, Virginie Maisonneuve, Global Equity CIO at Allianz Global Investors. Very nice to see you and good morning.
Thank you for having me.
So, should we start on central banks?
Yes.
How important are central banks right now, given that equity markets have done well, despite the absence of central bank support?
Yeah, I think clearly very important. We're at a transaction level in terms of rates and expectations. Sticky inflation, as we've seen, the core PCE in the U.S. is starting to soften a little bit. Right. Growth is softening as well. Still a lot of resilience in the U.S. economy, but our broad indicators of economic momentum have started to slow down, with the U.S. slowing more than Europe. Of course, you know, it has to be seen over the next few months. So I believe that the U.S. will err on the side of caution. I think the fear of a policy mistake in cutting too early will prevail until we have data confirmation. Clearly, the ECB has gone another path. They had telegraphed it enough. We'll see if inflation continues to be a little bit on the upside in Europe. If this was a little bit too early, markets will ask that. But in any case, the guidance that we were given is very clear. This is one, and then we'll see. So we're in that transition phase. I think it's not all bad in the sense that earnings are quite strong for companies. But again, you look at the U.S., earnings is really tech-driven, and that transformation that we've talked for many years now is still absolutely going on. But of course, other areas, and I would say it's the second wave of digital Darwinism that is now unfolding. Impact on power demand, impact on electrification, impact on software, etc. That is what you want to look at.
It seems like this whole kind of higher for longer, or even just even the whole, we're above growth trends, those sort of narrative seems to be questioned this week as well. I'm just wondering, is that better for bonds and maybe not so well for equities? Or do you think equities can still overlook some of those weak fundamentals now?
I think it depends on the earnings. It's all about stock picking. It's not about buying ETFs at this point. And I think the transition periods, the stickiness is what we need to evaluate. We know that most likely the next trend is down, most likely. However, it's the time to that point. It's the length of stickiness. And I think there is a potential risk that during that transition period, markets may get a bit concerned about stagflation, but it will be transitory. It's very clear.
So, I mean, to your point, right, markets have been able to ignore some of the issues because of this AI, and the tech earnings have just given us a reason really to be long. Nvidia's been a story, of course, we've been covering this week. How are you leaning into AI? You mentioned, do we go beyond hardware
Yes, absolutely.
Okay, power. Yeah. So how are you leaning into that in your growth strategy?
So you really want to look. It's this transformation that we've talked about for several years. Of course, you have the cyber side that's still absolutely critical in portfolios. Once you put artificial intelligence onto cyber, you have to have a lot of defense, right, and security. So that's one thing. But then it's the second wave. We have been so far in the plumbing phase of AI. Building the infrastructure, a little bit like your iPhone when it was launched years ago, took about 5 years to get beyond a nice camera and a map, right? For AI, it will be faster, probably 3 years, so we're probably 1.5 years into that, right? But soon you will see the impact and the transformation. Productivity increases, expectations of 6.6 trillion on a global basis by 2030 out of 13, 15 trillion worth of add-on to growth through AI. Productivity increase on a global basis at 1.3 percentage points, 25, 28 beyond. So this is really meaningful. So you're thinking about power demand linked to AI and the acceleration of the trend. It is not there. I mean, the demand is there, but the capacity is not there. So you're going to see a lot into that. And of course, the whole theme of data centers, etc., software, all of this is still to come. Right. It's going to be, very powerful.
If I could follow up on that too, because the debate right now in markets is, do we simply go beyond the semiconductor place here? Well, do you think semiconductors are too expensive at this point? Would you still buy into, even if it's a TSMC, the Samsungs of the world, for example?
I don't think not all of them are expensive, but it depends on your time horizon. You also want to think about the equipment makers, right? But I think it depends on your time horizon, and it depends on the size of your portfolio in tech and how you want to diversify. But I think this is still something that's important. Of course, parallel to that, as we enter that phase of decline in rates, and we know, again, the timing is not clear, you also see perhaps an enthusiasm for the US market, where now people are looking at Europe and saying, well, rates are being cut in Europe. Europe is very cheap. Are there other areas to invest in? And we like the industrial sector, for example, in Europe. We have a sort of manufacturing renaissance taking place. Europe has actually gone through that energetic transition quite well, and you are finding some really interesting companies there as well. So I think it's not only about US tech, it's all over, and of course China is also very interesting, but I've been talking about this for a while, so I'm happy to see that the market has rallied a little bit, but I think there's much more to come.
All right, we're going to talk a bit more about China in the next segment. There, more from Virginie Maisonneuve, Global CIO Equity at Allianz Global Investors. Still ahead, Alibaba.com saying the company wants to use AI to improve global trade. We have our exclusive interview with the president, Kuo Zhang, later on this hour. This is Bloomberg.
Welcome back to shows Dollar China on your screen, 726. Midpoint of the day is at 7.1106 against the US dollar, which should be, if I'm not mistaken, is that almost the same level as yesterday? We're about to find out in a moment, but there is your midpoint, of course, of the day. Right, coming through today, trade numbers coming through for the month of May at some point over the next few hours or so. Min Lo, our China correspondent, is here on set with us to give us a preview of what to expect.
Yeah, so we're expecting exports to grow at a faster pace, and for a second month as well. That's partly because of the low base last year. If you remember, this time last year, US and Europe were still dealing with high interest rates and inflation. But we're also seeing this global uptake, especially in the electronics sector. If you look at the South Korean trade data that came out in May, exports was up 9%, and that's usually a bellwether for trade in the region. Take a look at the estimates on your screen there. Imports exports are growing at a slower, expected to grow at a slower pace compared to the previous months. That's likely to reflect a weak domestic economy, especially with the protracted property crisis, weak domestic demand. So China has been leaning heavily on this export-driven growth, and we see the Biden administration expand the tariff regime on China. The good news is economists are saying that the global demand for goods is still going to be a boost for China, because these tariffed items, they still represent a very small sliver of Chinese exports to the U.S. But we want to watch out for the Europe's decision on that probe into the EVs, though, because that's coming out in the next couple of weeks, and it could have a bigger dent on China's exports, because China sells about 40% of its EVs to Europe.
Yeah, we saw that in some of these PMI numbers earlier. Let's talk about the PBOC, because we just saw an ECB finally cutting rates. Does that open the window for now the PBOC to possibly
Yeah, for
ease?
sure. So because China has been relying on this export-driven trade, and the thing about that is it's very dependent on the value of the yuan, and we see how that has eroded with the value of yuan falling. That's eroded the strength on exports, especially that's very significant in March, especially because we saw this big decline in exports. But that really masked the fact that export volume actually had been inching up to record highs. So the PBOC has had their hands tied for a while. They can't really use monetary easing to boost the economy without the yuan falling even further. So this time, with the ECB and the Bank of Canada cutting rates, we could expect PBOC to follow suit with a rate cut possibly as early as in June.
Recent data we've also been talking about has been mixed of late. I mean, what's it really painting here right now?
Yeah, we have been seeing this, mixed recovery, different segments of the economy growing at different paces. And especially if you look at the PMI data, Caixin data showed a modest uptick last month, but then the official PMI data had outpaced that. So that shows that, external demand is still strong, but domestic economy is still very weak. So we want to watch out for what clues we can see from the July plenum in terms of policy signals.
All right, Min Lo, thank you, our China correspondent, with a preview of what to expect out of that trade data. Just come out any minute, any second, any hour right now. Virginie Maisonneuve is here for the hour, though. She's still with us, Global Equity CIO at Allianz Global Investors. We're starting to see this sort of short China, long everything else trade, a bit of a reversal here of late. You seem to be quite excited about it. So can this really continue, you think?
Yeah, I think clearly it won't be a straight line up. It's going to be volatile around the U.S. election. We know that those debates are going to be brutal. But I think people who are not in China today need to use that as an opportunity to position, because there's a lot of exciting things going on. There's a whole, again, digital transformation, the whole innovation that is being ignored by many foreign investors at this point, at the time when we know the property market issues are not completely resolved, but we're probably 2/3 of the way down. So we also see the government stepping up with some measures regarding improving the quality of the stock market, for example. This is really important. We have to remember we have a country with a very large population that is aging very rapidly. A large part of that population has put money into property. And of course, this has been quite painful. So the right thing to do, it would seem, would be to help people diversify their savings from mostly property to property, bond, and stocks. And for that, something like a support from a reform in the pension area, for example, would be very helpful. And what you see in terms of the improvement of the quality of the stock exchange, in my view, goes into that direction.
So generally speaking, funds are too underweight still? China, how much underweight? And part of that, by the way, has gone to places like India and Japan.
Yeah, of course.
So does that need to come back?
To me, it's very clear that the Asian strategy for any global investor needs to be centered around 3 buckets. China as its own asset class. Doesn't mean you're fully on all the time. You manage the position. India, clearly number 2 economy, stock market in GEM, number 5 in the world, 18% share of global GDP from less than 8% 2001. So you need to have a bucket, and of course Japan. right? Those are the central pillars. And then, of course, playing the rest of Asia and managing that. But China is its own asset class, for sure.
You mentioned the amount of innovation that investors may be ignoring. A lot of innovation is being hit by tariffs and the threat of tariffs.
Yes, yeah.
How do you manage that geopolitical risk?
Oh, I think so. Managing, I just wrote a piece called Shifting World Order, talking about geopolitics in general and how I think we're really in that post-Second World War new order or shifting order. That's very, very important. What I think we need to do here is equity markets find it very hard to anticipate geopolitical risk. So you go back to valuation and earnings power. We have to remember that we cannot, at the planet level, deal with the carbon issue and climate change without China. That's very clear. I think in terms of production capacity, if you take EV, for example, there's a lot of places where China can export if some tariffs were to be put on. Think of the global south. Look at exports to countries around the world that really need EVs. I also think that the important fact to remember is that for Europe, China is a much more important trade partner than it is for the US. And so depending on the results of the election in the US, Europe will have to find its way on how to deal with its relation with China. So as we've seen with the recent tariffs that President Biden has put in place, which are only about $18 billion out of over $400 billion, it's very small. So I'm not sure Europe will go full on to put very high barriers to entry. At the same time, remember, the car industry is a big employment source in Europe. So we'll have to have, I think we'll see JVs, I think we'll see, deals made one by one. But for Europe, China is a very important trade partner.
Virginie, it was a pleasure to have you come on. It's nice to see you in person, by the way.
Yes.
Let us know when you're
very
back
nice
in town
to
next.
be here. Always love it.
Virginie Maisonneuve there,
Thank
Global
you.
CIO Equity at Allianz Global Investor. We were just talking EVs there. So NIO was out with earnings yesterday. Missed their decline, in fact, and shares overnight down. Shares here in Hong Kong down. Similar amounts, 7%. And we're also looking at Meituan also out with results. More on this in a moment. The Open, 6 minutes away. This is Bloomberg.
Yeah, we talked about the two big earnings that came out yesterday here. Meituan, we're seeing a bump up the shares of 2% or so. UOB Cayenne just coming up and raising that stock to a buy with a price target of 130 now. So sales beat estimates. Also overseas plans about really heading to the Middle East. That certainly is lifting the stock here. We talked about NIO, that EV competition really heating up. We're down some 6.5%. We're watching, of course, some of these other BYD EV stocks the like today.
Yeah, but the report there, 100 billion renminbi into autonomous driving. More on that in a moment. And of course, the Open is just ahead. Hang Seng Index ahead of the final session of this week. Happy Friday. You're watching the China Show.
Welcome back. You're watching the China Show. We're counting down the open of markets there, and certainly we're still seeing some optimism across these markets and really focusing on the tech space. We talked about NIO, we talked about Meituan, those earnings coming out. A bit of a mixed picture for both of those. We'll break it down for you throughout the next 2 hours or so. Trade numbers could be coming out any day now, any minute now, so we'll see how that plays out. But we are expecting a bit of a jump when it comes to the export side of things and the external demand picture. Bloomberg Economics, they're thinking about 12% gains in exports today. A little bit of an outlier there, Dave.
Yeah, from a low base, but yeah, the point I think of our folks at Bloomberg Economics is, it will really underscore this factory-led recovery. Although I think when you look at PMI, which you pointed out earlier on, new export orders might be indicating that May was maybe on the high side of things and the momentum is starting to come off. We're also coming off, by the way, and speaking of fairly busy macro-wise, ECB, of course, we're going into the jobs report coming through as well. Anyway, back to the micro story. And really, when you look at this market that has been range bound, in fact, Shanghai Composite is seeing a bounce. But, at about these levels, we did I think we fell to about the lowest since April 25 or 26, 6-week low. What is encouraging, though, what we saw yesterday was turnover actually picked up. We've been talking about how it's been trending lower. Over a single day, I think we were highest in about 2 weeks or so. Some of your big heavyweights on bottom of your screen, so you don't see the 30-year yield. We do have a 30-year bond auction today, special bonds, next hour or so. Oil's been a big story this week. We're back again, seeing a bounce across global crude prices as well. Right, have a look at Hong Kong and where we are as far as this market goes. So a couple of things here. Tencent is now up a 5th day, 4 days straight, going into this morning. Meituan was out with earnings. We're down about 0.5%. Let's wait for this so we really get warmed up and for markets to, I guess, digest, which was, by the way, a fairly encouraging set of results, a beat in revenue. 60% up, I remember correctly, on the extremely bottom line there on net income. A couple of other movers we're talking about here today. So, well, there's NEO. There's a NEO story also on earnings. BYD on this report out of the Shanghai Securities News that it is investing 100 billion renminbi into autonomous driving. So at the exchange rate today, that should be, what, 13 billion or so, US dollars. Chow Tai-fook is seeing a bounce following the rumors yesterday that the company then had to clarify going into the close yesterday that it was not going to be a substantial disruptor, if you will, to the mainland business in terms of the production cuts they're seeing. And of course, Smoore International, some of the companies that of course make e-cigarettes, for example, on this. This one is actually news as well. There came an announcement that Hong Kong is looking to ban smoking. Can't do this in line. And of course, I think vaping too as well. But yes, that's the story there. Drop of 2% yesterday. We're flat at the open here today, Yvonne.
Yeah, you can't. I mean, basically, vaping's been banned.
Okay.
Alternative smoking products, and yeah, don't smoke
don't smoke
while
in
you're
line.
in line.
Yeah.
Or you're waiting
Who
for
does
a
that?
bus. Come on.
No.
Don't do that.
Do it
okay.
in a dark corner somewhere.
All right. Let's talk a little more about Alibaba.com now, launching a cross-border trade service to help streamline the supply chain for smaller companies in the U.S. and beyond. The president, Kuo Zhang, spoke to Bloomberg exclusively about the company's expansion plans and the impact of tariffs on its platforms.
Now, Alibaba.com, actually, we serve around 200,000 SMEs, suppliers, in China and also globally. And what we see this year compared with last year, I think several things. The first one is more and more SMEs is willing to participate in the global trade. So they are more willing to sell globally. So one example is that, so there's a small city in EU, all commodities actually selling and distributing in EU. And for the first quarter of this fiscal year, so customers in EU who join Alibaba.com actually grow 70% compared with last year.
Where are you really aiming to expand then Alibaba.com? Which markets are you going after?
So let's say from the buyer side and the supplier side. So from the supplier side, actually we expand the supplies. So now it's not only in China, but it also expands globally as well, like in Southeast Asia, in Korea, in Europe, in Mexico, and North America. And last year, actually, we do acquisition in Europe called Visible, which is the biggest kind of marketplace in Europe. VOV for the Dutch language area and Europages for the rest of Europe. So now we are supporting them from the technology perspective to enable them to boost from the Yellow Pages to transactions to the kind of like the guarantee services that we provided to help the intra-business kind of trade. And Alibaba.com can help the global SMEs do the cross-border trade. So this is what we're going to expand. And for the buyer side, actually it's global buyers. The buyers, which is booming now, is in US, in Europe, and also in Latin America and Southeast Asia, this kind of developing countries. And different countries actually have the different type of demands for different categories.
the value proposition, I think, from a buyer is pretty clear. You know, you can
That's
get perhaps a product for a cheaper price. What do you think then that there are concerns around overcapacity, for instance, from a lot of different European countries? How do you respond to those concerns? Because that sort of does speak quite closely to the Alibaba.com model of being able to connect more suppliers to new markets and offer good products for lower prices.
So in one way, that we kind of enrich our selections with multiple supplies, like supplies in Europe. So we see there's a great supplies for fashion in France, like wines in Italy, and the machineries in Germany and in Italy as well. So there's a lot of SMEs actually doing a great job on Alibaba.com. And as well as we mentioned before, that we do acquisition, investment on Visible. We do that it's not only for a kind of financial investment. We are going to use our technology and the know-hows to kind of boost their technology engine to help the small and medium business within the Europe to do the kind of intra-Europe collaboration. So I think there's one part. The second part is the fundamental rule for global trade is supply and demand. So if there is demand required for kind of a quality product with a better price, and what we are going to provide is to lower the barrier for both sides. So the SMEs themselves, the entrepreneurs themselves, can survive and get enough margin out of that and can make a business.
Earlier this year, we did some reporting from the Canton Trade Fair, and some of the different people that we were speaking to there said that even with the risk of some very hefty tariffs, and that was referring to possible Trump tariffs if he were elected president again, but they would be able to withstand them given that the price is so competitive that's coming from China, and the quality as well is also so high that it still is a very competitive and compelling way or area or country to purchase from. What's your view on how much Chinese companies and the SMEs that are on the platform, how much can they withstand that risk of extra levies being applied to their products?
Okay. All the entrepreneurs, from their eyes, there are many problems that they need to serve. So what product I'm going to provide? What type of employees I'm going to hire? And what about the kind of, the economics, tax? And tariff is only one part of the tax. So when we see the global supply and demand, we're starting from the fundamental ones and how to improve the efficiency and how to help them to build up their own business based on the global supply chain, which is more competitive also for the SMEs. So that is what we do today.
That was the president of Alibaba.com, Kuo Zhang, speaking exclusively with our tech reporter, Annabelle Jewelers. Right, just ahead on shows, we're staying on tech. Futurum Group explains their bullish case for AI. So Daniel Newman joins us to talk us through, of course, this fairly eventful week in Computex in Taiwan. HS Tech, bottom of your screens. Plenty more ahead. This is Bloomberg. Right. It's been quite a week, of course, as it pertains to this AI story. More on what happened in Computex, and Jensen Huang, of course, on your left, and that's signature leather gear. On the right is, of course, the market cap conversation, and you have now between Nvidia, Apple, and Microsoft 333 trillion, 9 trillion both. That's now taken the market cap of those three only above what you have for the entire Chinese stock market, excluding Hong Kong, which is, by the way, not a minnow. That's 9 trillion too. So it just goes to show how extreme the version's really been as far as this AI conversation. Disruptive.
And they're calling it Jensanity. Gosh. I mean, this brings us back to Linsanity. But yes, Jensanity was what really fueled this, right? This week that he had in Computex. He wasn't even a keynote speaker. He was just there to make a little bit of his own sort of pitch here. But certainly, he was surrounded. It was a circus everywhere he went, whether it was having dinner with other CEOs. I mean, there was that picture that went viral too, Dave. He was signing his autograph on a girl's chest and all. But yeah, rock star status, basically.
There was, of course, a layer of clothing.
Yes.
Yes, okay. If
you
want to rephrase it.
You probably have seen it. Yeah. Yes. She was wearing clothes. Futurum Group CEO Daniel Newman now joins us now. He was there. Yeah. To see all that fanfare. Daniel, you're back in the States. I mean, just kind of give your key takeaways of what you saw in Taipei this week.
Yeah, first of all, congratulations on the new show. Terrific. It was a huge week for tech. And of course, Jensen did kick it off. You pointed out it wasn't a keynote, but yet he filled the NTU stadium, or the basketball arena, the sports arena, with 4,000 plus people that all wanted to hear what he had to say. And it was an update to the GTC keynote. He was very focused on the data center. And the show, though, in Taipei, the Computech show, was really a lot about the AI PC. Now, of course, that was the Copilot Plus moment. So it was a big moment for Qualcomm, and then AMD, Intel, all had their new sort of PC variants. But like you said, I mean, Jensen is the driver of this AI movement, the $3 trillion valuation. Is there exuberance? Sure. But do they control the market? Absolutely. Are there companies that want to compete? They sure do. But I would say it was just reiterated just how much the market believes that Nvidia has a 5- and 10-year advantage right now, and that isn't changing by anything that any of the other companies said, especially as it pertains to AI in the data center.
Right. So is there any use even looking at our traditional measures of how we would measure a stock's valuation at this point, P, or pick your version of price to something, for example? Is it useful to even look at whether or not this is expensive or not, given the fact that you said it's not changing for 5 years?
Absolutely. I mean, look, investors still have to be thoughtful in their actions. When it was trading at $150 or so in 2022 in July, I was saying this could be the buy of a lifetime when I was talking about just the AI movement in the companies that had the opportunity. And then when it hit over 900, I put an op-ed out and I said, it's made a really great run. And that doesn't mean it's not a great company, but you are talking about it has very high concentration with 5 customers. It has a big pull forward on the buying for CapEx. You have every hyperscale cloud provider on the planet looking to build their own chip. You have Intel and AMD coming in behind. And of course, you have margins that you have to ask, how sustainable are these margins? But having said that, if you are a defensive investor, if you want to be in on AI and you want to kind of be safe, it feels like Nvidia is still the safest bet.
Yeah, well, that's certainly what price action has told us recently. Certainly, this obsession around the company. I mean, you probably know the Cathie Wood story, and of course, ARK's experience with Nvidia. They took it from, I think, stock split adjusted $4, rode it all the way to 400. So they've done well. I was actually speaking, Dan, with Cathie Wood yesterday, which I want to play. I want to get your thoughts on that. And effectively, she laid out that the reasons why they got out at 400, they effectively said maybe at that point in time, it's time to broaden out the plays on AI, for example. Let's play it out, guys, please, for our viewers.
We're saying to ourselves, wait a minute. If Nvidia is going to keep running like this, the only reason it should deserve to do that is if it's going to benefit a lot of other companies. And we began to look at what those other companies might be. We did pull away, and I suppose it was a bit of a statement, but we said, hey, if this is not going to benefit other companies, then what is this move in Nvidia all about?
Dan, suffice to say, I guess in hindsight, if maybe they knew it would go to 1,200, maybe they would have made a different decision. But I think the other point they were making there is concentration risk around playing AI. Just your thoughts on that.
Yeah, look, I mean, Cathie Wood has been criticized heavily, and I guess in the long run, we'll see if she was right or wrong. But, my overall perspective on it is the concentration is high. I've heard up to 19% from a single customer, multiple double-digit % customers. We have had this huge CapEx pull forward. We've seen benefits like Dell has been a huge beneficiary, but then we've also seen some scrutiny to their gross margins in recent earnings reports. where they've done 1.7 billion, but some of the analysts asking questions on the call is saying, well, how much margin is this adding? So it does seem that the Nvidia is the biggest beneficiary. And maybe in the long run, I think it's the SaaS providers, but they're actually being hit pretty hard right now.
So, I mean, can you talk us a bit more? I mean, who is still best positioned to rival, I guess, Nvidia when it comes to AI chip design right now?
Look, in the short run, you have to give a lot of credit. This wasn't an accident. This is 10 plus years of hard work. You know, they were considered a gaming company, but Jensen had the vision for accelerated computing all along. Intel sort of pulled away. Now they're getting back in with Gaudi. They're coming in with a price position on their new Gaudi 3, saying we're about a third less. Unquestionably, Lisa Su, the $4 billion pipeline they've had for their MI product is interesting. The software is going to be the story is, can they get away from that abstraction, that CUDA abstraction that everyone says is so tightly locked in? But the kind of the dark horse here is the cloud providers, all of them, you know, Azure, AWS, Google, they're all making chips. Google trained its entire Gemini model on its own infrastructure, on its own TPU. And then, of course, you've got companies like Broadcom, which have run really well on great business principles under Hock Tan, and they're doing it by basically delivering these custom ASICs, these custom silicon to companies. And of course, they've got the networking, the Ethernet networking, which Jensen actually validated during Computex.
You mentioned about AI PCs as well, Daniel, which is sort of this new thing. Obviously, AMD, Intel, these are people that are really trying to maintain that market share in that. Qualcomm has kind of emerged as this sort of PC AI sort of star as well. I mean, is Qualcomm becoming a bigger name in all this? And can Nvidia also join in on this more directly?
Yeah, absolutely. So Qualcomm had a tremendous show. It actually goes back to Microsoft Build about 2 or 3 weeks ago when Satya Nadella and the team sort of anointed Qualcomm and the Snapdragon X Elite as its preferred Copilot Plus. And of course, you saw at Computex, Lisa Su came out with new specs on their Strix Point. You know, 50 tops is the number they use. Intel showed their Lunar Lake. But Qualcomm got the early advantage, and Qualcomm overall has become a really interesting company. They've entered PC very successfully. They've got a $45 billion automotive design pipeline. And now they got Microsoft saying they're the AI PC partner that they were leading with. And of course, eventually Satya showed up for everyone. And then you heard Rene Haas from ARM basically come out and say he believes that 50% of the PC market in 5 years can be based on ARM. And you would have to say that Qualcomm has a significant advantage there. Now, he could be talking about Mac, although Macs are not PC in most people's eyes. But that's a big leap. And really right now, it would have to be Qualcomm and its partners and then some new entrants like maybe MediaTek and Nvidia, to your point. There seems to be some thoughts that may be a thing, and the rumors have definitely been out there.
Daniel, of course, we're on the China show, so we have to ask, you know, what China, you know, and their role in this whole AI race as well. I mean, their access, of course, to these advanced AI chips has been, I guess, gone through some hurdles here right now. How do you think these Chinese players are going to get these today and even in the future?
Yeah, look, there's plenty of speculation about China being able to get its hands on chips through multiple different, you know, sources. We've heard, you know, through Singapore, through the Middle East, and of course, that's always been a challenge through history in terms of managing any of these chip controls. Of course, in terms of its own development, you know, China, it would be very reckless for the West or for the United States or for any other part of the world to rule out its ability to build its own. We've already seen it, you know, taping in at 7 nanometer, being able to make things in low production. That'll accelerate. Of course, we saw what it was able to do on the handset side with Harmony and with Huawei, being able to develop something very meaningful that impacted Apple in a short period of time. So I think China is going to move the needle forward. It is going to find a way to compete, and it is going to find a way to get product. I do not rule it out, and I think it would be a mistake to. Having said that, without access to all the ASML and all the chip technology and getting all the most advanced silicon, it does put them at a significant disadvantage.
Daniel, in 30 seconds, please, if you could, antitrust, and are these companies becoming too dominant from the perspective of regulators? Is that something we should worry about?
Look, I put an op-ed out about this. I think it's on the fringe. It's a little bit early because usually you have to have this advantage for an elongated period of time. Early and straight away, Nvidia has market share in GPU like Intel in CPU, but it never became a full-on antitrust issue. Nvidia has been remarkably successful. It will see antitrust, but I don't know if they will be able to really break that as we move forward.
Daniel, great to have you on the program. Thanks so much. Daniel Newman there, Futurum Group CEO, joining us out of Austin there this evening. Plenty more ahead. This is Bloomberg.
Welcome back to the show. So one stock that we've been paying attention to closely in the after-hours trade in the U.S., GameStop, and when you look at what it's doing in after-hours trading, you really understand why. So 62, which at this point would put us at about near the highs that we hit at the start, going back to early May, intraday level, when the story, of course, reignited itself. And the news flow, of course, is, I believe, a potential return to YouTube.
Yeah, so he had this post. It didn't have any information, though, on what his plans were or whether he would disclose new positions. But the market seems to be getting ahead of themselves and thinking that it's going to be something that's bullish on GameStop. But they're talking about this live stream that's going to kick off 12 p.m. New York time, so something that you can watch if you're still staying up here in Asia as well. But yeah, I think they're talking about more than 10,000 YouTube users already signaled an interest in being notified of when the stream is going to start. And obviously, we've seen that live chat featured hundreds of comments before. So certainly, there's a lot on hand. I was reading some commentary about this. It's like, we're not sure if he's a manipulator or if he's just a genius. This roaring kitty.
Well, it's certainly an influencer,
yeah.
right? In the way that he manages to, well, for one, gather attention. We're talking about it now. And
is it going to be like 2021, though?
Yeah.
People say maybe not.
Okay, well, we have to go online soon.
It's building it up, though.
Right, brief look at markets right now. We've now trading flat across most of Greater China. Plenty more ahead, though. This is Bloomberg.
Welcome back to the China Show. Here's a look at the CSI 300, just a half hour into that session, and we're pretty slow going, basically, when it comes to some of these Chinese stocks. Obviously, we've been talking about how, this whole kind of, I guess, pivot back into this market, this less underweight, certainly has led to some, although we've seen some consolidation of late, but still seeing signs of maybe more optimism that this whole sort of short China, long rest of the world, that seems to be reversing here right now. Hong Kong's not much better, though. We're still down about 1/10%. We're still waiting for the jobs report. Those export and import numbers coming through from China could come out in the next hour or so. But yes, what are you watching, Dave? Yeah,
well, we're looking at, day after ECB. That's one, right? It might give us an indication of maybe what the Fed won't be able to do. Some finality to the conversation. Earnings, of course, as you talked about here. So we got NEO 7% down overnight, 7% down right now. That loss certainly was certainly wider than the estimates. Meituan is the curious trade right now, 0.4%. A beat on revenue. The net income, I think, was 60% up. We're still down 0.4%, but maybe to your point, right? A lot already has been in the price given the rally here so far. More in this in a moment. Asia ex-China, and we're looking like this today, and we're looking at, as Yvonne is pointing out, at some point, and if the recent releases are any indication of this, we could get the trade numbers coming out at some point within the next 2 hours, maybe in the latter part of the next hour, but we'll see. We'll see. That could drop anytime is what I want to get to here. 2- and 10-year yields, bottom of your screens, all the way there. And, of course, Brent crude is seeing some downside, although you are getting a catch-up trade on the Shanghai contract as well. We're flat on the benchmark across all. Euro-dollar, as you can see, it looks like we have hit, or we did hit, a ceiling just above 109. Hawkish cut is how we are going to be describing that, of course, more in the ECB in a moment. And I'm forgetting something I should be mentioning here. You know what? Once I remember it, we'll get it. It's
you still
probably
got a
not
whole
that
hour
important.
to remember.
Yeah.
You can bring it up later on. For more, let's bring in our Asia economics correspondent, Katia Dmitrieva, to talk. Let's look at the U.S. jobs report. I mean, this is the last major print, I guess, before the Fed meets next week. What are we expecting?
Yeah, it's going to be the last major print, as you said, in CPI, which is the following week, happens the same day as the beginning of the FOMC meeting. So it'll really be up to this report. I think traders and economists are expecting about 180. That will put us in line with 175 in the prior month. But things are really slowing down. So if you look just at the number, looks like things are holding up. But below the surface, you have job openings that are at the highest in multiple years. You've got jobless claims that are sort of ticking up every week. We were below 200 at the start of the year. We're now at something like 230. So things are really weakening in the labor market. And I think the Fed will be focused on that, of course. The tricky part will be if we get a pretty strong jobs report and CPI numbers show something completely different. So if both reports show us something strong, then that will indicate one thing for investors. It gets really tricky when it's a mixed bag. And then we kind of are left with what we had overnight from the ECB.
Yeah, if you could clarify for us what Lagarde meant. I mean, there was some firm pushback that this is not an easing cycle. I think the language was they wouldn't say that the bank is moving in a dialing back phase.
Yeah, that's right. It's basically they also moved up their inflation expectations, which was very surprising because typically you would cut and investors were not expecting that. And also there's going to be probably this divergence we're seeing in central banks, and that's exactly what we saw from the ECB. So you have inflation expectations in Asia, in emerging markets that are diverging from one another, but also within these regions, you also, like in Asia, we have some central banks that are looking to cut rates. We have some where they're actually increasing rates to protect their currencies. So I think for the ECB, it's a completely mixed bag. It's you see inflation moving up, you're cutting, and then you're signaling we're not entering a cycle yet. Some central banks are, but it's not for us, at least not yet. And that we might actually see that from the Federal Reserve as well.
All right, Katya, thank you. Katya Dmitrieva, our Asia economics correspondent. On what to expect out of that jobs report, also what we heard from the ECB. Joining us now is Joohee An, CIO at Mirae Asset Global Investments Hong Kong. Thanks for joining us. I mean, we all talk about how crazy it was at the beginning of the year when people were pricing in 6 rate cuts for the Fed. We've come down a little bit now to maybe about 1 or 2. I mean, do you think right now, given with the commentary they've seen, the data that we've seen, that that's reasonable?
Yeah, so there were lots of disappointments in this, bank pushing back. But I think finally, after we saw the Canadian, the central bank cut the rates, and also the ECB to follow the suit, and then now at least people still have uncertainty in their mind about how many times, once or twice, but at least they have more conviction on the direction. So I think that's helpful for the risk assets, including equities in EM Asia.
Yeah, so we're moving into the second half soon, in a couple of weeks. How are equity markets, this part of the world, set up for the second half?
Yeah, so I think one of the most big characteristics in what happened in first half was actually the rally in China market. And then there was driven by the optimism on the stabilization of the macro, and also probably earnings revision cycle could turn around. But now the China market, MSCI China, used to be at 8 times, and then now it's 10 times. It's already became the double digit. So from here, we have to see the kind of continuous improvement in the property market in June and July. So because already, the May and April and May already we saw kind of some improvements, even though that's year-on-year minus negative. So we have to just keep looking for that, and also plus although the export, the numbers will be very strong. I think it was stronger, especially last month, but domestic side is still, we are seeing some weakness. For example, like some sales growth of the retailers and sportswear and some kind of typical consumer names. Still, they are releasing kind of lower than expected numbers. So from here, I'm still very positive for the upside potential in China market, because it's still 10 times, and then the positions is very light.
Still only 10 times.
Yes. Yeah, and then so the direction is kind of upward, but it's not going to be linear path. So there will be ups and downs. So that's why in the second half, especially when we are going to see the U.S. election soon in the second half. Yeah. So that's why we have to be more balanced between, I think we have to have some positions in China, but also some structural, growth stories like some tech, the beneficiaries of, the AI in the investment cycle, or even India, even after this very shocking result of election, the India, that's very structural, and then it's going to be, soon to be like a third largest economy in the world. And then I don't think that the direction of the policy is going to be changed drastically after this election, even though they're going to maybe take care of some, some part of the pyramid, which was a little relatively more neglected in the previous, 2 terms.
Yeah.
So, so that's why we have kind of overweight positions in India and tech-related, stocks, mostly in Taiwan and some in Korea. And also in China, we also have almost like a neutral the position in China as well.
Yeah, you mentioned about some of your top holdings are within these semiconductors in Korea, TSMC, and the like here. It's just interesting that that it's still important to kind of stay in the sort of hardware sort of side of the AI trade. We were just talking to a previous guest saying it's trying to broaden that a little bit more to maybe applications, the like. Do you see any opportunities on that side?
But I think in terms of the application side, it's going to take a little more time to see some profitability this side. So now that's a big question mark. But at least that the capex on in investment and also kind of hardware side, I think still it's very hard to say that this is like a later stage of the big cycle. So that's why we have more positions in that side. So for example, like a TSMC or some of the memory chip players in South Korea, they are having the very dominant in the positions, and also even a top line, bottom line. I think we are seeing more kind of upward revision potential than the downside risks, even after this big rally.
How visible is the earnings outlook for these companies? So TSMC, I think, is clearer than some of the Koreans, for example, like SK Hynix. But are you satisfied? Can you see beyond 2 years, for example?
Yeah. So the encouraging thing is that for example, like Taiwanese companies, tech companies, they usually release a monthly data.
Right.
So the recent a few months, I can see that more and more companies, they release a better than expected monthly data, mostly driven by higher contribution from the AI-related products. So I think it's going to support, the heightened the valuation going forward. So now, of course, it is expensive. It's not just Taiwan or Korea. It's globally, tech AI-related thematic stocks are all very much more expensive than before, that's for sure. But at least it's being justified by better than expected ongoing kind of upward revision on the kind of both sides, top line and bottom line.
Yeah.
So and also at the same time, this is not the kind of later stage of the big investment cycle. So that's why I think we have to kind of spend time horizon a little bit longer than just a few quarters from here.
Yeah, it's funny how markets, when there's something this big and exciting, they tend to ignore some of your warning signs on valuation. But I guess you're right? So valuation. Now, for someone like you that oversees, of course, a mandate, right? And you have real estate allocations, of course, in your portfolio, 100%. You can't go more than that. So you mentioned China deserves something more. AI, it might be too early to trim. Do you think you'll get that from India because of what's happening there? Or where else would you get that, for example? That
we underweight in mostly in ASEAN, the countries. And also the China, it's not overweight yet.
Okay.
So we reduced underweight drastically, but it's a slight underweight or neutral. But I think the second half of this year is going to give more kind of good opportunities to build more positions, because I don't think this China play is very short term. We have a strong belief in the kind of long-term potential of China in terms of the technology development, or if you think about their very highly educated people, which is 1.4 billion population.
Right.
And so we have that kind of belief. So I think when we are going to see some ups and downs in improvement of macro or kind of the earnings revision cycle, especially in the second half, and plus U.S. election is going to, I think, cause lots of market volatility when we are getting closer to November.
Yeah.
So I think it's going to be a very good opportunity to build a more China position during that kind of market volatility. So to prepare for more kind of meaningful recovery and then a turnaround of earnings revision cycle from next year.
Yeah. How do you take advantage of the volatility? I mean, you mentioned the tech space. Where can you stay positive in that China tech space now?
Yeah.
In China tech, even though there are lots of sanctions and then there's really great issues between the U.S. and China, but at least we saw some products from Huawei and then local brands.
Yeah.
So I think I think that was the pace of development on their own is actually it's showing that they actually have the capability, even though it could be slower than previously expected. But I think technology side, if you look at the the number of patents is a lot more than any other countries in the world. And then, so I think we believe in the long-term potential in technology side in China.
And outside of tech, and I think what you mentioned too there is it's still a tactical trade for you, China, right now. You're still waiting to move that up to maybe market weight, if not overweight. What are the areas of the China equity market that you're looking at, that you're tempted to go, maybe this is it, if we do get more signs of stability in the economy?
Yeah, so far we have been a little more defensive in terms of the portfolio in China, even though we increased the weight. But the big holdings in China is more about the kind of steadily, structurally growing the sectors and the companies where we see less cyclical impact from weak, macro. But going forward, I'm looking for the effect, kind of how effective this property policy will be, and then again. I want to see more kind of ongoing and continuous improvement in property sector, and also plus, more importantly, the income growth of people and the kind of confidence level of the Chinese consumers is still quite low. So hopefully, it's been already more than a year since reopening. So I think the consumers, they are getting more and more confidence and kind of getting more kind of comfortable with kind of macro environment after that. And then the companies, they are going to also, they have to more kind of increase their confidence level so that they can hire more people, and they can invest in increase their capex. So everything is kind of has to work together. But now the starting point is from the property market. So let's see this June and July, just like we saw the last 3 or 4 months of the improvement, we are going to see more improvement, ongoing improvement for the next 2 to 3 months plus third plenum in July. If we see any more in the positive news from that, then I think even consumers, they can get more confidence. And so everything, it needs to be worked together.
We talk about maybe the confidence shaken a bit in India this week, just a little bit. I'm just wondering, you mentioned the policy direction is not going to change. How do you justify the valuations, though, in that market now?
The Indian market has been trading at premium almost all the time because of the very high, much higher ROEs, and then entry barrier it's much higher. But after the COVID, I think, and then also big geopolitical issues came out between China and China and the U.S. The Indian market has been trading at a slightly higher value, kind of premium. But I think now after the several reforms that Mr. Modi successfully started, I think now the fundamentals of the Indian economy and the market, and then the earnings quality is still improving. So, for example, like this year, India is one of the few emerging equity markets that is still showing upper revision of the earnings. So it is expensive, more expensive than the other markets, but this structural story cannot be ignored. And then, so any volatility driven by kind of the political issues or any other non-fundamental issues, and I think we can use it as a kind of buy on dip opportunity.
All right. Joohee, it's great to have you. Joohee on there, CIO at Mirae Asset Global Investments Hong Kong. Just a reminder as well that you're expecting the official trade numbers for May anytime now. Of course, the economy is expecting a jump in exports and slower growth in imports. That trade balance expected to remain steady from the previous month. But close to 6% gains when it comes to exports for May.
Yeah, we'll break them to you once they show up on our Bloomberg terminals. Okay, just ahead on shows, Alibaba.com said a company wants to use AI to improve global trade. Our exclusive with the President Kuo Zhang coming up later on here on The China Show. You're watching Bloomberg. Happy Friday. All right, so we're about almost an hour into the session here. So NEO, as you can see, is playing catch down to what we saw in ADRs overnight. So we're down about 7 to 10%. We're down about 7% in the early goings here. The company NEO specifically reported first quarter revenue that missed estimates. Let's get the details here from our tech reporter, Annabelle Jewelers, who's here with us to talk us through. This price move in NEO is indicative of how the market feels about those results, I guess.
Well, yeah, I mean, it wasn't great numbers, really, whichever way you look at it. And we had really already seen this sort of coming through in the guidance, because back in March, NIO sort of reset expectations around how many vehicles they'd be delivering in this period.
Yeah.
So that kind of came in line with estimates, but revenue itself, that fell to around the 10 billion yuan mark, and that did miss estimates. And as well, what people are really looking at is the wider than expected loss for the period, because that came in at around 5 billion yuan, or around $677 million. And that's not something that analysts that we're speaking to, like Citi, also our Bloomberg intelligence team, they're expecting it to really stay in that range even in the months ahead. And that's even if we do start to see perhaps a return of sales growth.
Was it all bad news? I mean, were there some good news there? I mean, sales are still picking up.
Yes, I guess it's a bit of wait and see mode, because what's been interesting about NIO is that this is a company that really started about a decade ago, but had that focus on the premium segment, and they pulled a lot of funds into that. Now they're sort of shifting their focus, because they've announced this bet on the mass market brand instead, and that's called Omvo, and so that's actually still in production. We're going to see the first deliveries of that coming through in September, and this is a brand that's going to be really aimed at trying to tackle Tesla's locally made vehicles. So that's the big question, and the question as well really is how well they can start to do in overseas markets, and this is something else that came up in the call with the CEO William Li, and he spoke and referenced this potential that we could see EU subsidies on Chinese EVs, and he said that definitely if it did result in tariffs, it wasn't going in the right direction, but still they are exploring those overseas markets, and that's really the trend, of course. We continue to track Chinese markets that need to look for growth abroad.
Like Meituan in the Middle East, you're about to tell us about that, and also the earnings story.
Yeah, there's a couple of different things. I mean, let's just start off on the Middle East then, because this is something that Meituan has been looking at. They actually have an app called Kita. If it sounds like cheetah, that's actually intentional. But Kita is an app that's been in the Hong Kong market, yes, and it's actually risen to number 2 here. So they've been successful. So they're looking at the success they've had in the Hong Kong market, and they're looking at where else they can go. And the Middle East has been flagged as one option for that. But they're going to be quite cautious how they do that, because, of course, Meituan, you still need to control those costs as well.
Okay, well, what about the overall earnings, and what's that looking like?
Overall earnings, this actually came in stronger than had been expected, and Meituan has done pretty well. If you look at a year-to-date basis, they're up around the 40% mark. If you look over a longer-term period, of course, we know Meituan IPO'd and then just, really was part of that broader sell-off in Chinese equities. But still, revenue for the period came in around $10 billion. That was a little bit higher than what analysts had been expecting. And as well, it does really tell us that they're coping pretty well against those rivals within China, because you've got the likes of Kuaishou, ByteDance, Alibaba's already in that food delivery scene. So it tells us that the efforts they've made around business optimization to reduce costs, they're still being able to fend off their rivals.
All right, Annabelle, thank you. Annabelle Jewellers there, our tech reporter. Speaking of tech and really what we're talking about on the EV side of things. So there's an interesting report from the Journal that came out and citing some group of Republican lawmakers, and they're basically saying that companies like CATL and Goshen should be added to the ban list from shipping goods to the U.S. So that's why you're seeing that reaction in CATL shares. We're down close to 5% here right now. So that's what's coming up. These letters were sent to the Biden administration, according to this Journal report as well, both of which, of course, are battery companies.
Yeah. Okay. Goshen, of course, is the other one that is, I think, Hefei-based, traded in Shenzhen. Right. Okay. Let's take a look at some of the other big corporate stories that we're tracking at this point. So, Boeing's space taxi has docked with the International Space Station, bringing the spacecraft's 2 passengers to the orbiting laboratory. Now, the docking process had been delayed, of course, as you probably may have heard, delayed earlier due to a thruster malfunction. Now, the docking was a key moment for the long-delayed Starliner aircraft and an important test for Boeing. Now, SpaceX's Starship rocket blasted into space before plunging back into the Earth's atmosphere for an ocean landing, notching a key objective on its 4th major flight test. Now, the vehicle landed in the Indian Ocean, mostly intact. Elon Musk plans to use Starship to launch larger Starlink satellites and eventually bring cargo and people into space. Right, that's a wrap of those stories for now. A glance at markets. We're trading flats down across tech, specifically on your screens. We're still waiting for the trade numbers for May, which could come out any time now. So plenty more ahead. This is Bloomberg.
All right, taking a look at chips here this morning, in particular SK Hynix, take a look at that, moving some 4% to the upside here. Basically, they're coming to agreement with TSMC to strengthen the cooperation on AI chips as well. So that's how you're seeing a pop of the shares there. Taiwan Semi's heading the opposite direction, although it's had a stellar run this week already. But yeah, Morgan Stanley also raising that price target for SK Hynix to 300,000 now for that stock.
Yeah, more in this. We were supposed to avoid talking about AI.
It's hard to this week.
But then the news came they pulled us back in. They pulled me back in. Yeah, but yeah, that's the story then. Perhaps raising it to, that's what, half? That's 50%, right, from current levels?
Yeah.
It's also been a big week in elections, and of course India, so we're done mostly with that story. I would say, of course, longer term, there is still something to talk about. There's an RBI decision coming out today, of course, keep an eye on that. No change expected there. It's jobs day, and of course, we're coming off quite a hectic week for the Mexican peso. Poised to be still, I believe, the worst performing EM currency so far this week. And it has been, of course, the king of the carry. Plenty more ahead. This is Bloomberg.
All right, close to 11:30 in Tokyo here this morning. Of course, we're watching these Japanese markets heading into the break. A bit of downside here, but we're basically feeling it across all of Asia here today. Yeah, dollar yen, there's a little bit of weakness, but hey, we've been holding on to 155 levels, which is actually strong this week. Stand out for this week as well. Obviously, the BOJ meets next week as well. We have a pretty interesting story and survey out there that, you know, the BOJ might be looking very closely at maybe starting to reduce some of the bond purchases. That could be something that we could hear next week.
Yeah, because that effectively affects monetary policy, right?
Yeah.
So it's moving on rates without having to do it, or it's an introduction perhaps if they are to move as well. It's live next week, right? I think when you look at markets still. Although, you know, dollar yen has really eased off a little bit when you look at these levels, 155.75. And it's certainly a case where you have a dollar that has been declining. Maybe that's down to where we saw the ECB, for example, although when you did look at a euro, for example, that did hit, it looks like we're coming off a 109 that seems to be, at least for these next few weeks, might be the ceiling unless we hear otherwise as well. Right, Asia, outside of Japan, looking like this. It's quiet. There's the U.S. jobs report, of course, coming out later today. 180,000 is the job print we are expecting there. 0.1% to the upside. We're getting some weakness coming through, and understandably so, because of how much some of these AI trades and AI plays in the region have done, and done quite well. Of course, IT index is one of your sole weak spots today. But as you can see, on price, these are extremely tight trading ranges we're looking at today.
Yeah, and we're still expecting to see gains for the week, at least when it comes to Asia equities here. Let's talk about brokerages, right? Because we're talking about China's Tiger Brokers. Says it's aiming to double its Singapore revenue over the next 1 to 2 years. As it continues to shift away from its home market following a regulatory crackdown. Joining us now is John Zeng, CFO of Tiger Brokers. John, it's great to have you here and to meet you in person finally as well. Congratulations. You're moving basically your headquarters to Singapore with this expansion.
Right.
And you're doing quite well in the city. How have you managed to attract clients in such a competitive market?
Yeah, thanks. You know, first of all, thanks for having me back. You know, so in Singapore, we right now is the biggest online broker in Singapore. Right now, if you look at our asset under custody, more than 50% come from Singapore and Southeast Asia regions. And I think right now, every adults in Singapore, 1 in 3 have Tiger APP. So we are expanding really fast in Singapore. So I think, you know, our success in Singapore comes from several reasons. Number one, our app is very easy to use. We have a really good customer user experience. Second thing is our trading products are very comprehensive. You know, we have US, Hong Kong, you know, ETF, you know, mutual funds, all those kind of stuff. And also in Singapore, we are getting more localized. We partner with a local bank to issue debit cards. So people, when they swipe their debit cards, they can get fractional shares, okay, for say Tesla or Apple. And also we are doing those contra tradings. So for investors who wants to trade, but they don't have to put in the initial deposits, we get the initial credit to trade. So those are the localized stuff we are doing in Singapore. You know, we just want to be able to offer a comprehensive service with a local practice. That's how we grow in Singapore.
How would you describe competition in Singapore now that you've gone from pretty much zero to dominant?
Right.
And I'm wondering how you guys did it.
Right. So the competition is, no matter where we go, there is always competitions.
Right.
I think eventually it comes down to your product, whether it's very unique and very user-friendly. I think that's one thing. So we spend a lot of resources in R&D to make sure our product is up to date and also to offer the best customer, user experience. Okay. The second thing, of course, is you have to keep innovating, right? Like the debit cards, the contract trading, all those kind of stuff, to make sure users want to use your service. Yeah.
Can you apply that same strategy to Hong Kong, which is sort of a new market for you as well in terms of attracting clients?
Yes, definitely. So we started to expand in Hong Kong last year. Okay. So far we have seen very good progress in Hong Kong. Okay. So the the user quality we get in Hong Kong is pretty good. Like I just reported a couple of days ago. So the initial deposit for our Hong Kong users is about $18,000. So I think that's pretty good. Okay. And of course, Hong Kong is a financial hub. A lot of investment opportunities right here. Definitely, we see a big growth potential in Hong Kong. Yeah.
Have you seen flows pick up? I mean, the market's done well and I'm wondering what you're seeing as far as flows and, new, whether that's retail investors or institutional coming in or signing up.
Yes. We definitely see flows come back, starting from the first quarter of this year. Okay, right. So the market backdrop is more, I would say, active. Okay, coming into the second quarter, we think the market is still pretty active, so that's good. Okay, if you look at the IPO markets, right, the Hong Kong IPO lately has been doing pretty well versus end of last year.
Okay,
and also
that's a low base comparison, though.
Yes, for sure. But it's good to see something's
happening.
Yeah, something is happening, right? Yeah. So finger crossed, right? Yeah.
It's interesting. I mean, we have to talk about this regulatory crackdown that happened in China, and there was a bit of clarity, at least from the regulators last year, saying that this ban on cross-border brokerage services doesn't apply if you're living outside the mainland.
That's correct.
How have you seen in terms of activity across some of your mainland investors opening offshore accounts? Has that still remained steady? Has it slowed down?
Yeah. So after the regulatory guidance, we stopped accepting new clients from mainland of China, okay, unless they live or work offshore.
Yeah.
For existing clients, no issue. They still can top up their accounts. So we just keep servicing the existing clients. So, but our focus is to grow offshore, right? Like in Singapore, in Hong Kong, Australia, New Zealand, and US. So that's why you see on our quarterly reports, more than 50% of our new funded account every quarter comes from Southeast Asia region. Okay, Hong Kong counts for 10%, given we just operate here for over a year. But hopefully, in this year and next year, Hong Kong will account for a bigger portion of our quarterly new funded accounts.
Yeah. So as a percentage of the assets that you manage, or the assets under your platform? I think it's a better way to put that as well. What's the percentage of Hong Kong, and you mentioned Hong Kong's 10%, and China, mainland China, combined?
So Hong Kong right now is still very small percentage. Yeah. Okay, but like I mentioned earlier, it's more than 50% comes from Singapore. Okay. I think existing, the legacy Chinese customer accounts for only 25% of the asset under custody.
Okay.
Yeah.
What are some of the trends that you're seeing among Chinese investors here right now? What are they interested in really investing in?
Yeah. So I think right now, if you look at the southbound flow, actually have picked up a lot. Yeah. After starting of this year, our research shows about 240 billion RMB, the southbound flow come to Hong Kong. So definitely Chinese investors, they love to invest in Hong Kong, given the valuation is still attractive, versus before. Yeah. Our research shows the standard deviation, the Hong Kong Hang Seng Tech Index is still one standard deviation below their historical 4P average. Sure. So I think definitely valuation-wise makes sense. And obviously Chinese investors also invest in US ADRs, the Chinese ADRs, given still a lot of companies listing in the US. Yeah.
I'm looking at your stock price. It's been fairly on the downside, let's put it that way. Do you think it's too cheap? Do you think the stock is too low?
I think given we have a lot of confidence to grow our business, right? So we cannot control the market sentiment or the multiples, but I think as long as we can turn on earnings, the stock will come back. Yeah.
But I mean, there are things that. I mean, would you consider buybacks, for example, or is expansion still, you think, the best way to use your capital, for example?
Expansion, because we are still a high growth company. Okay. So I think we'd rather use our money to expand, to drive more ROE for our investors.
Right. Yeah, tell us a bit more about those expansion plans. I mean, obviously Singapore's big, Hong Kong's a new market, but your competitor Futurum they're rapidly expanding in new markets like Japan, Malaysia. What are Tiger's plans?
So right now we have 6 licenses, like US, Hong Kong, Australia, New Zealand, and the UK, and Singapore, of course, right? So I think our strategy is to penetrate deep in the market we are operating, you know. So like I said earlier, is now even though we are the biggest online broker in Singapore right now, we still think there will be huge potential, okay? Because right now our users are relatively young in Singapore, so we will expand that age group to include the older, you know, investor group. So our strategy is to penetrate deep, okay, to make sure we can take the whole market or majority of the market in the regions we are operating. Yeah.
Watch out competition, right?
Yeah, for sure. For sure. Yeah.
Can you give us a profile of your typical user? Because you mentioned you want to go up in terms of the age bracket. So like, are these like, what's the age range typically? How much typically is that pool of funds, investable funds? And what do they like about the technology? Like, what are people looking for when they want to trade?
So the typical age group of our user is about like I would say like below 45. Okay, 30 to 45 majority. Okay, a lot of them work in the tech company before, in the financial institution before, so they are more accustomed to those like, you know, tech companies or you know, the technology, those kind of stuff. So when the users, what they're looking for in our app is you have a lot of free data, right? Because they want to have those like live market data, you know, handy. And also, they want to have all the products they want to trade. Okay, so no matter it's traditional product, ETF, or mutual funds, or FCN, those kind of stuff, you know. So we want to bundle everything together on our platform to have a one-stop service.
In terms of just the overall macro picture, I mean, obviously we're talking about whether the Fed's going to cut rates this year. I mean, once they do, how do you think that's going to impact inflows or
volumes?
Interest income?
I think interest income, if the Fed's going to cut the rates, there might be some negative impact on the interest income because the interest rate going to go down, right? But on the other hand, it's like technically, traditionally, when the Fed cut rates, the market activity tradings will be more active. Okay, so I think we will find a balance, you know, given all the products we offer, and also we are keep adding more services to drive more outputs from our users.
John, it's a pleasure to see you and talk to you and meet you, of course, in person. When was the last time we spoke? 3 years ago?
2021.
During COVID.
John Zeng there, CFO of Tiger Brokers. Thank you so much. Okay.
All right, thanks, guys.
Breaking news. This is out of Japan. Wow, quite a big one here. So, MUFG and SMFG, of course, those are the 2 big financial giants, are said to be planning an $8.5 billion divestment of shares of Toyota. We're just in the lunch break, keep in mind, of course, so we're not really seeing any sort of reaction just yet. But just to give you an indication, of Toyota was down 0.4% in the morning session. Mitsubishi UFJ, perhaps Toyota's a better gauge. We'll talk about Toyota in just a moment. But yeah, that is the headline coming through as well. That's according to, of course, I would imagine people familiar with what is going on. There we go. Plenty more ahead. This is Bloomberg. Welcome back to shows. So we're looking at the benchmarks right now, 1.3%. So we are hitting or trading at about, if not near session lows here on a specific gauge. We're getting a bit of a move here as far as small caps are concerned. This is really one index we haven't really revisited in a long time, following the manic moves we've seen in the last few months before. 0.6%. The CSRC here effectively easing concerns over the number of potential delistings moving forward. So that is at least providing some tailwind here, of course.
Yeah, let's talk about Alibaba.com, saying the company wants to use AI to improve global trade. Their president, Kuo Zhang, told us exclusively about their plans for the technology.
Actually, this year we are targeting on 2 parts. The first part is about AI. So, you know, AI GC, the generative AI, actually is one of the biggest kind of breakthrough for the technology. And using AI in global trade actually is one of the perfect user scenarios. So many use cases that we can help to improve the efficiency for the sellers. We can help their efficiency, how to post product, do the marketing, do communication with buyers, and as well as to manage their business, to see data. And we are using the technology to help the seller, the buyers as well. So previously, the buyers using Alibaba.com as a sourcing engine. And now with help of AI, this kind of a creativity engine for the buyers, we can help them to generate a product which can fit their imagination, and we can use the agent to help them to source, to connect and trade with the right partners. So all this kind of technology can lower the barrier for the seller and the buyers.
Where else are you looking for expansion? Then we spoke about the visible acquisition. Are there any other companies that are in your sight at this point in time?
So two type of companies that we have interest. The first one is about the technology. So, for example, we make investment in Vantage and in Oki. One is help us to build up the kind of a trade network. I mean the payment, the fintech part and the logistic part and the custom clearance part. And Oki actually is the work part, work at Alibaba, which provided all the SaaS kind of services for the customer, just like a CRM, like what a Salesforce to do for the salesman. Actually, we provide a similar CRM system for the traders, for the sellers. And we buy, this is for the technical pillar. And the other pillar is the marketplace, like Visible. So there are more supplies and demand, and we can help them to upgrade their technical engine. So for this part, we can help the marketplace to be a better marketplace. So these two type of pillars are the companies that we have interest in. And we are kind of working with different partners around the world, not only by acquisition, but also by all type of kind of partnership.
And you've obviously made these acquisitions and developed this strategy at a time when Alibaba itself has been going through organizational change, because we've seen a new leadership team coming in, and we've seen plans that had been discussed around splitting off different business units, listing those. That has also been changed as well. So what's it been like operating in that sort of environment, and do you think that there's more clarity now moving forward?
So Alibaba.com is a part of AIDC, is Alibaba International Business, and we are the B2B part, and they are the B2C part as well, like AliExpress, like Trendyol, Lazada. So one thing that we can feel is that the collaboration is more close with each other, since we are in the same kind of territory, which is global trade. Either it's a regional or cross-border. There's a lot of technologies, a lot of kind of infrastructures we can share with each other. The second part is about the decision-making. The decision-making is more straightforward and much faster, and this is very important for the business. And the third part, I think, internally, everybody feel inspired by the entrepreneurship. So there are more ownership, you make more decisions by yourself, and the business can go faster. I think this changed the mindset and the behavior of the employees daily basis. And what do we say that is change is only constant thing in Alibaba, I think in many of the tech companies as well. So what do we want? We do today is leverage the best of that.
And that was the exclusive conversation that Bill had with the Alibaba.com president, Kuo Zhang. Just playing that out, of course. There we go. Okay, plenty more ahead. This is the China Show.
Here's your China Brief. A look at what's making headlines in national newspapers and trending on social media. We've got the financial papers giving an update on rules for program trading. The Securities Journal quoting unnamed sources saying detailed regulations will be released soon, covering the volume and proportion of trading order cancellations. Meanwhile, the Securities Times saying that mainland companies are increasingly seeking to list in Hong Kong due to stricter IPO reviews on the A-share market. Other reasons include attractive listing rules in Hong Kong and policy support for overseas Chinese listings. And Shanghai Securities News reporting that small to medium-sized banks in several provinces have lowered deposit rates this month to reduce debt costs. Citing analysts, it also says a fresh round of deposit rate cuts could be coming, with banks suffering from shrinking interest margins.
Now, on social media, this morning's hottest topic, should not come as any surprise, is the National College Entrance Exam, or the Gaokao. The government says some 13.5 or close to 13.5 million students have registered for the test, which of course has a reputation for being extremely tough and being a big factor in determining the future trajectory, of course, of careers. Social media users are cheering on exam takers, giving them the good vibes, of course, ahead of these, but also expressing some concerns about the future as the economy slows, and some of the commentary coming through on social media. This is one, I don't know the significance of wishing for an exam that may not even be useful if one does well in this period where even graduates from the very top schools struggle to find jobs. Is wishing to get into a top university a blessing? Good question, actually. Or is it a curse?
Yeah, and this year's high school entrance exam, some are saying, doesn't seem to be causing as much anxiety among parents. Now, one reason could be the widespread difficulty in finding employment after university graduation, which means I guess there's not a whole lot of pressure out there to get into the top universities right now.
Yeah, which I guess in some ways might help alleviate that crush to get into the limited number of spots.
But it's also a pretty gloomy outlook, right?
Yeah.
You don't have to work as hard because there's no jobs out there for the youth.
I actually forget which of our guests came on and had the comment about the job market. I'm trying to remember now. That because the job market is soft, that people are going from, let's say, your university, they're going straight to their master's degree instead of even looking for jobs and even moving up into their postdoctoral, for example, from a master's degree, and getting that done. And perhaps that will tie them over until when they come out, then the job market is much, much better on the economics. And you talked about, of course, all the interest rates cuts, of course, that are taking place in the deposit rates on the property sector. These are all interconnected in terms of just the weak demand that we're seeing in this economy.
And why we're not seeing maybe this pickup in home sales just yet, right?
Yeah.
Because, the job prospects are still quite
Not
pretty
getting
weak.
married is a part of that too.
Yeah, not getting a job, which is difficult as well. So certainly consumer sentiment is still something that is a bit of a concern here. And that's why you're hearing the likes of Xi Jinping really talking about that as a policy priority, which is basically boosting that youth employment picture as well, which brings us to what's going to happen in the plenum, of course, right? There's that. Before we look at that in July, obviously what's happening next week is a big one, right? So this week it was Bank of Canada, it was ECB cutting rates as well. How does that set the tone for the Fed next week, right? So obviously, we still have an RBI decision to deal with here today, of course, after that setback in the Modi election, or the election for Modi. But U.S. jobs report first, so that's quite going to be the big test here on whether we're going to see maybe some indication of these rate cuts putting back on the table for investors as well. And then you got this U.S. inflation coming through. I think it's around just right before the Fed decision, or is it after? I'm figuring out the time.
So I'm looking at the time now. Okay, so the U.S. CPI print is, it's definitely a Wednesday. That should, that should come out actually before the markets open Wednesday. And then, of course, it's 2 p.m. Eastern time Wednesday when the Fed comes out. So that's early morning, of course. As usual, Thursday here in the Asia Pacific. So does one have a bearing on the other? I would imagine there is some, perhaps, an early glimpse of what the data looks like to then inform them of what that might look like as well. In any case, we'll get to that. And then when we're past that hurdle, it then takes us into the BOJ towards the end of next week. But yeah, that's a week away. There's a weekend ahead.
Yeah.
Let's get to that now.
Let's get to that first.
Please.
All right, we're checking these markets. We're not going anywhere, really, because of what's really in store here, that jobs report. Obviously, that's what really is hanging on investors' minds here today. We're flat when it comes to the Hang Seng. HS Tech actually seeing a bit more of a pullback now of 1% or so. We talked about NEO really driving that, given the weak and wider than expected loss there. Meituan also turned negative as well, despite earnings looking decently well. But there you go. We're back into positive territory for Meituan there. But there, 7% drop for NEO, really mirroring what we saw in the ADRs overnight as well. What else are you looking at?
Yeah, looking at U.S. futures right now, we're trading about 5 points higher on the S&P E-mini. That's about 5 points, so that's about a session high as we speak, 53.69 on that specific level. And of course, the other benchmarks there going into the jobs report. And of course, we're looking at overnight, the session was one of consolidation. So we'll see we have full trading left in the U.S., maybe half a day in the Asia Pacific, and as we move into, of course, the Middle East and also in Europe. That's it from us here this week from the China Show. Plenty more ahead, though. This is Bloomberg.